Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. With 2013 complete, it's important to update our forecast through the end of 2014. And to do that, it's first important to take a look back to see what we saw in 2013 in terms of sales and average price. So we saw a total of 87,111 transactions reported through the Toronto MLS system last year. And this result was up by about 2% in comparison to 2012. Over the same period, we saw the average selling price up by more than 5% to over $523,000. Now with this said, these calendar year statistics tell us one thing, but it's important to sort of break down and see how we saw this unfold over the course of the whole year. And in fact, 2013 really was, again, a tale of two halves, where in the first half of the year, when we're talking about sales, we actually saw year-over-year declines in the number of transactions through the Toronto MLS system. And this is because households were still coming to terms with the stricter mortgage lending guidelines that had come into place in the second half of 2012. But as we moved into the second half of the year, we started to see a resurgence in buying activity. And this is because a lot of those households who had initially put their decision to buy on hold were coming back into the marketplace as they realized that there was still a lot of affordable homeownership opportunities throughout the region. Now, when we think about pricing, we actually did see pretty much continuous price increases throughout 2013. But again, in the first half of the year-over-year growth rate was slower than what we saw in the second half, and that's because we did see a tightening in market conditions. So if we think about what drives price growth, one of the key drivers is that relationship between sales and listings, demand and supply in the marketplace. And so one of the indicators that we use to measure demand and supply in the marketplace is to look at months of inventory. So we look at active listings at the end of a given month and divide that by sales that we saw during the month. And that gives us an idea if we didn't see any more listings coming into the market and we continue to see market activity remain the same, that tells us how long it would take to deplete standing inventory given current market conditions. So when we look at this chart, we see that months of inventory coming out of the recession has been lower than what we'd become used to in the years leading up to the recession. And in fact, if we look at the second half of 2013, we actually saw the trend for months of inventory move lower again. And that means that competition between buyers increased in the second half of last year. And that means we saw more upward pressure exerted on the average selling price. Now, it's also important to break down the market in terms of home type. Certainly over the last few years, we have seen an emerging difference between market conditions in the low-rise side of the market, so for single-detached, semi-detached, and townhomes, versus the high-rise side of the market, so condominium apartments. Certainly, if we look at the first half and second half of last year in terms of sales, we did see it following the general trend that we observed for the market as a whole, where sales were down for major home types in the first half of the year and up in the second. But what's really interesting to note is that the leader of sales growth in the second half of 2013 was the condominium apartment segment. And that's interesting because when we think back to this time last year, a lot of commentary in the marketplace was suggesting that we'd see a protracted downturn in terms of the condominium apartment segment as we moved over the next couple of years. And certainly if we look at the first half of 2013, we did see the average condominium apartment selling price down on a year-over-year basis. But as we moved into the second half and we saw demand pick up in this market segment, we saw market conditions tighten quite a bit, and then we started to see more upward pressure on the average selling price for condominium apartments as well, certainly well above the rate of inflation. Now, it's important to note that when we're talking about the condominium apartment market and specifically about price growth, one of the key drivers there is what we expect to see with regard to construction and, more importantly, completions of new units. And so in 2013, according to RealNet Canada, we saw a record number of condominium apartment completions in the Greater Toronto Area. And so this suggests as we move into the second half of 2014, we'll start to see an uptick in the number of condominium apartment listings on Toronto MLS as some investors decide to sell their units. And so the degree to which we see demand remain strong for this type of housing will dictate what type of price growth or the pace of price growth we'll see in the second half of 2014. But suffice to say, we should expect to see that segment of the marketplace remain the best supplied, certainly more so than for low-rise home types like singles, semis, and townhomes. And that's a nice segue into our overall outlook for 2014. And let's start off with sales. When we're thinking about what we expect to see for sales moving forward, two important factors are going to come into play. Number one, affordability. So that interplay between price, borrowing costs, and incomes. And secondly, it'll be important to see what we have in terms of new listings coming into the market as we move through 2014. So let's cover off affordability first. When the Toronto Real Estate Board looks at affordability, we're asking the question, if a household earning the average income were to purchase the average price home in the Greater Toronto Area, would the monthly payments associated with mortgage principal and interest, property taxes, and utilities remain affordable? So right now, through the end of 2013, we saw the share of income going towards those major housing payments at around 32%. So that's certainly a comfortable level for the average household in the Greater Toronto Area, and it's well below the 39% ceiling set out by the federal government in the second half of 2012. Now, when we're thinking about where we expect this affordability indicator to go through 2014, obviously a key lever will be what we see in terms of borrowing costs. And so the Bank of Canada, in their most recent statement released in January, indicated that the target for the overnight lending rate, their policy rate, would remain at 1%. And indeed, if you read the language of that latest statement, the consensus view now is that we won't see any movement on the part of the Bank of Canada until 2015, and more than likely the second half of 2015. But while the short-term borrowing costs associated with the Bank of Canada's target is important, even more important when we're talking about the housing market is our fixed mortgage rates. So for example, the bellwether when we're talking about mortgage rates in relation to the housing market is the 5-year fixed rate mortgage. And that mortgage rate is driven by the bond market. And so if you look at the yield on the 5-year Government of Canada bond, this gives you a sense as to how much it costs lenders to raise money to then turn around and lend out to home buyers in the form of a mortgage. And so the consensus view in the bond market is that we should expect to see somewhere in the neighborhood of, say, a 15 to 25 basis point increase in the 5-year Government of Canada bond yield through the end of 2014. Now, the slight uptick in the bond yield will not necessarily feed through into the 5-year fixed rate mortgage. And that's because the spread between the mortgage and the bond yield has actually widened over the last couple of years. And so a competitive mortgage market could mean that the actual posted mortgage rate remains flat or even edges lower over the next year. So with that said, borrowing costs will keep affordability in check in 2014. And so that means the outlook for sales this year is positive as well. We're expecting to see a total of 89,000 transactions through the Toronto MLS system in 2014, again, up from a little bit more than 87,000 deals in 2013. Now, the expectation is that low-rise listings will remain constrained this year, and so that'll keep the increase in sales modest. In fact, if we did see strong growth in listings in 2014, we could actually see sales move towards a new record high as more households would be able to get a deal done on a home that meets their needs. And so that brings us to price, because obviously our expectation is that we're going to see sales up and listings flat or even down further in 2014. And this points to more competition between buyers as we move through the year. And so our baseline forecast for price growth is to see the average selling price up by about 6% on a year-over-year basis, bringing the average price in to about $555,000. And while current conditions point to even stronger growth than this in the marketplace as a whole, it's important to remember that we are expecting to see more condo apartment listings come online in the second half of this year, and that'll have a mitigating effect on overall price growth because the condo apartment segment of the market accounts for about a quarter of all deals through the Toronto MLS system. And so that brings us back to affordability. We are expecting to see quite strong price growth on a year-over-year basis, again up by about 6%. And so the expected average selling price of about $555,000 will see the share of the average household income going towards those major housing costs, mortgage principal and interest, property taxes and utilities, moving up to about 34%. And so now at 34%, that share of income going towards those major housing costs remains still well below the federally mandated ceiling of 39%. And that's where we're going to continue to see strong demand for ownership housing in the Greater Toronto Area. So that brings us to the end of another forecast summary. I look forward to speaking with you again in the spring when we'll provide a further update. Thank you very much.
Brought to you by GTA Realtors.